Hello everyone. I welcome each one of you to this amazing course in India, which is the Chartered Accountancy. So my name is Sumanth. So I'm a qualified Chartered Accountant. So I have qualified all my CA examination at very first attempt. So there is a term known as exemption in the Chartered Accountancy, which means scoring more than 60. So in CA exam, we don't usually we see that will be using people will be usually using the word pass, that's it. So but we have a term exemption in CA, which is known as scoring more than 60. So nowadays scoring exemption is very easy in Chartered Accountancy, so through these online resources and all. So I welcome each one of you again to this amazing course, which is the Chartered Accountancy. So now you would have recently seen a web series also based on our course, which is the half CA. So it is not tough like that, but yeah, it is tough. It is one of the toughest exam in India. So qualifying that will give an immense name in the society. I tell you, the respect to get after qualifying a chartered accountant is immense. So I'll tell my experience. So the day when I cleared my CA, I was on heaven. I was literally on cloud 9 because you get so much appreciation. You're sorted. Your life is sorted once you clear your chartered accountancy. So now to do that, we have to put in our effort. So literally you have to give your at least 5 years, including articleship or the training which you undergo. So if you give your 100%, done. You are through it. So you would have asked by your family that do CA. So now you have joined based on your wish or someone else's wish, but end of the day you have to clear it. So we will make sure that we will learn each and every concept in detail so that you clear it in one go. That's it. One go you have to clear it and add a tag in before your name, which is the CA in before your name. So that is the agenda of this very particular class. So now coming to this subject, so accounting. So CA and accounting are like husband and wife. No CA can survive in this world without accounting. So he has to know accounting in his every breath. The accounting should flow in his blood. That's what CA. So if you talk to any CA, every time he'll be talking about accounting because he has crossed an ocean of accounting. I'll tell you, CA is an ocean, but everyone can cross it, but they have to give their 100%. So nowadays people can survive in an ocean. You would have seen in news that people are surviving. They swam across the ocean, but this CA course is an ocean. People tell that it is an ocean, but yeah, it is actually an ocean, but everyone can go through it if they give their 100% hard work. So in CA, I'll tell you 99% of hard work will work and 1% of luck will work, but 99%, if you give your 99%, 1% God will give you. I'll tell you. Okay, so go with a positive motivation. So with the hope of that, we will be clearing in first attempt. We'll start with this subject, CA foundation. So basically I'll tell you the levels in CA. Okay, so CA, if you take, we have foundation, as you know, we have CA intermediate and we have CA final. Okay, now everywhere accounting comes in. So you would have seen in different names. You would have seen in by the name of financial reporting in CA final. We would have seen as advanced accounting. So here you would have seen as accounting. So everywhere accounting is there. So the base of accounting should be so strong that when you reach at this level of CA final, you should know every damn thing. Okay, now with that basic information, we'll go with the study material. So before going to the chapter, we'll be seeing all the syllabus. We will see that what the institute. So first you have to give respect to the institute. So what is our institute name? Institute of Chartered Accountant of India, which is headquartered in Delhi, and we have regional centers across India. Okay, but they are the one who give us the certificate. So once you clear your CA examination, you get a membership ID. So that ID is very respectable, I'll tell you. So if you now on the basis of your sign, people see that the company is going well or not. Even if it is MNC or a very big company, at the end of the day, they should come to us. They should ask our signature. We should sign that this particular company is going good or not. That is the respect we have in the society. Now, so as I told, the book, institute or the statutory body which give us the certificate is the Institute of Chartered Accountant of India. They are the one who give us the certificate, that they are the one who certify that we are a qualified chartered accountant. Okay. Now, so what is the skill set required at foundation level? I'll tell you, at each level the skill set requirement is different. So now, as a foundation student at the entry level, what is the requirement that they are asking from us? So it is just an entry level requirement. So I assume that there are two sets of people now, from a commerce background and from a non-commerce background. So commerce background, they will have bit idea that this is what it is happening. So because they would have learned from their +1 and +2, but for a non-commerce student, it is totally new. So we will make sure that we will, in this particular class or this particular session, we will make sure that we will learn each and every concept in detail and line by line, so that each one of you seeing this class will understand the class. So it should not be a differentiation between commerce people understanding and non-commerce not understanding. We will make sure that we will understand, each one of you should understand the concept of accounting. So you should never forget the accounting. So as I told, the basic level requirement is that entry level. Okay. So now, know your syllabus, which means what is the syllabus which you are going to learn, or what is the study material that we will be learning through this course. So this study is designed to overcome the needs of home study and distance learning students. Okay, so this has been divided into 11 chapters. So we have 11 chapters in this particular course of accounting. So each one will address special aspect of accounting. So because we do business, so everyone has a business in India, everyone will do. So your father or your family member would be doing business, so they would have to do a monthly filing, GST. Annually they have to file their annual returns, which is the income tax if you're a sole proprietorship. So based on all this, for doing each and every return, every filing, every income tax, whatever you do, you need accounting, which means you have to record a transaction. Simply you can't tell that I made a sale of this much, I made a purchase of this much. Each one should be recorded. Okay, so that chapter 1 to 5 will emphasis on bookkeeping. So we will see what in detail, what is bookkeeping, what is accounting, what is accountancy. So what do we do in bookkeeping? Every aspect we study in detail. Okay, which forms the basis of preparation of financial statement. So we'll see what is a financial statement. So you would have heard the term balance sheet, you would have heard the term profit and loss account, cash flow statement. So each thing we will be discussing in detail, and we will be preparing in class only. So we will be doing everything in class itself. So there will be less homework, everything will be, or a less kind of assignment, but everything we'll discuss in class only. So each and every line, each and every question, everything we'll discuss in class, so they should not have any doubt. So your job only is to revise. So I'll tell you the main, how I cleared my CA exam in very first attempts. Revise, revise and revise. That's it. So you have the notes, you have the study material, revise it. How many times extra you revise, that much time you'll have grip on the subject. So if I'll tell you, so in my days I used to revise for 4 times, 5 times, even within a short period. So if you take 6 months time, now we have 3 times in a year. So earlier it was used to be 2 times, June and December. So now it is 3 times. We have it September also. So that is the reason now the time is less. So that's why we have to revise and revise. So the chapter number 7 focuses on the financial statements of sole proprietorship, which means people like you, me, we will also have, I'll also have income, I will also have some assets. So what is asset? Something you own. So see, if you take a mobile, so this is an asset. This is an asset for me because I will be using more than 1 year. So we will be discussing each and every term. Then only we will be doing the problems. So first we have to understand the term, then we have to see the problems. So we'll be preparing the financial statement of sole proprietorship, which means the normal people like you and me. Then non-profit organization. So you would have seen an NGO that people would be collecting money for some students, from old people. They'll be collecting some money, no? So they have to prepare accounts. Nobody is exempted from accounting. They need not pay tax, but accounting, yes, must. They have to do accounting. Explains how accounting is done, and bills of exchange. So there is a term bills. So you'll see that. And accounting of partnership firm, partnership or LLP. So what is partnership? I and you sit together and make a business. That is partnership, which means 2 or more persons. 2 or more persons come together, do a business. That is known as partnership. We'll see partnership also. Then the company accounts, which is mostly expected from a chartered accountant. You and me have to prepare a accounting. So some people will do auditing. So our main aim of the life is two things of a CA. One is audit, one is accounting. Audit means I have to check verifying whether the accounts is correct or not, and the accounting is nothing but preparing it. So I will only prepare, I will only audit it, but two persons should not be same. So one who prepares the accounts and one who verifies the account should not be same. So for that we have different people and regulation also. So that is what it is covered in this particular chapter. So how is the study material designed? First is the learning outcome. So which means they will give at the beginning what is the learning outcome. So what you will learn out of this chapter. So next we have the chapter overview, which means the index of the particular chapter. So then the content. So the actual content, it may be in the form of diagram, example, illustration, problems, numerical illustrations, true or false, etc. As I told, illustrations. So summary, at the end of the chapter obviously you'll have the summary and test your knowledge. What is this test your knowledge? You learnt everything, but you have to apply it, no? What you have learned you have to apply on a question, no? That we will see in your test your knowledge. So we will be having some questions, we have to solve it. Okay, so ICA has told us happy reading and best wishes. So yes, now we will see the syllabus. So we have seen what is the requirement. So they have just asked us the entry level requirement. You should not have your IQ at a higher level. No, it's okay. Entry level is okay. Any average student can pass this examination if they give their 100% hard work. So if you give 100% of your hard work, obviously there will be luck to you. Luck favors the people who work hard. That's it. Okay, now we will see the syllabus. First one is the theoretical framework, which means they will give a theory knowledge how the accounting should be. So we will see the meaning and scope of accounting. So we will see what is the meaning of accounting and what is the scope of accounting and the accounting concept. So we have certain concepts in accounting to build our financial statements. What is the financial statement? The end results of accounting. So now you record that you got a sales bill, I recorded. So what is the end result? That also we should see. No, for doing that we have certain concepts in the accounting, that is known as accounting concept, principles and conventions. So which is so now you are a student, now you go to a school. What is the main thing? That you have to go in a uniform. That is the rule made by the school. So same like that in accounting also we have certain rules. So that we will see. So this revenue expenditure and capital expenditure. So the revenue receipts, capital receipts, contingent asset, contingent liability. So these are certain terms. So we will discuss going forward. So now only if I tell you, you will not understand. So we have to go and see in deep, so that we can understand the term and never forget in our course. Next, the accounting policies. Accounting as a measurement discipline. So we will see valuation principle, accounting estimates. So we will be estimating it. So that is the thing. Next, we have the accounting process. What is the accounting process? How from recording to reporting. So we will be seeing everything. First thing is that we will be recording the financial transactions, which means we get a sales bill or a purchase bill. We have to enter it, no, that I have made a sales, I have made a purchase. That is recording. Principles of double entry system. So in accounting we have the double entry system, which means for every debit there should be a credit. So that is the double entry system. That also we will see. Bookkeeping. So what is this bookkeeping? So you would have heard the term like people will be maintaining books in the Tally, SAP, Oracle. So they'll be maintaining their books. So these are the softwares where we can prepare our accounting instead of doing manually. So if you are a commerce student in +1, +2, you would have done manually. You would have passed in journal entry, you would have prepared a trial balance, you would have prepared a final accounts. Nowadays it is not like that. Manual, you can't handle it actually. So Reliance, you have a Reliance company, they have Reliance Trends, they have Reliance Electronics, which is you have the Reliance Fresh, Reliance Trends, you have the Reliance the store for the sale of electronic items. So take one store, in a day how many transactions they will do? They may sell n number of televisions, n number of refrigerators, washing machines, mobile phones, laptops. Each one they have to record. Take all over India, how much they would have done. How do you maintain it manually? It is not next to impossible. Not possible. It means next to impossible. You cannot even have a transaction. So that's the reason I will be maintaining everything in systems. So now for accounting we have accounting ERPs. So where we can have accounting also, inventory management also, everything. So bookkeeping, books of original entry, which means journal, what is subsidiary book, cash book. Cash book means normally what do we do? There are two bases of accounting: cash basis, accrual basis. So that also we will see. In cash book, what we do? We record all the receipts, which means whatever you get, what we get, and next we will be recording what we pay to the customers, or I mean the suppliers, salaries, wages, everything we will see. Then the posting and all. Okay, then preparation of trial balance. Trial balance is nothing but once you prepare all your ledgers. Now it would be confusing, but I'll tell you, ledger is something but balance. So trial balances will have all the balances: debit balance, credit balance. That is a list of all balances. After that, rectification of error. So there are some people who don't know accounting, they would have done some wrong. So we have to rectify. As a chartered accountant, we have to rectify the accounts. Then bank reconciliation statement. So we'll enter bank in our accounts, and bank also will have their own account, which means you know the bank passbook. So everyone has a bank passbook. So everyone having savings bank account will have a passbook. Sometimes there will be difference between the passbook and our balance. So we have to reconcile. So it may be due to some reasons, maybe check issued, but they would are not. It is not debited. Something like that. So inventory. What is inventory? The goods which we use to sell. So now I am a Apple store. I would have Apple mobiles, MacBook, AirPods, everything, iPads. So it is a stock to me. What do I do that? Do I take it to my home? Definitely no. I'll sell it in the market. So that is known as inventory. So valuation of inventory, cost of inventory, everything we will see. Then depreciation and amortization. So what is depreciation? Depreciation and amortization. So depreciation is nothing but the reducing the value of the asset. So due to wear and tear, or maybe due to obsolescence, something like that. So we will discuss in detail what is depreciation, methods of computation. So we have certain methods, accounting treatment, how do we treat the depreciation, etc. Then the bills of exchange. So this we will discuss. And next is the preparation of final accounts of sole proprietorship, one who is doing a sole proprietorship business, which means single owner. So the owner is one, he is only doing the business. How do we maintain his accounts? Then NGOs or non-profit organization, which means it does not prepare or do business for a profit. So that accounting from incomplete records, which means there are certain accounting which is incomplete and we have to prepare it in complete way. Then partnership and LLP account. So we will be first, the partnership is entered, which means admission of a partnership. Then partner would have gone out, retirement, death, changes in the partnership, one coming in, one going out, changes in the ratio, profit sharing ratio, everything. Next, finally the company account. So what is company account? So I am a company, I issue shares, I redeem shares, etc. So this is the syllabus. So totally we have 11 chapters. First one is the theoretical part, which means it completely covers the theory. Second is the accounting process, where we will be starting with the practical illustrations. Then the BRS, which is the bank reconciliation statement, inventory, depreciation, bills of exchange. So from here the level of difficulty starts. Okay, so up to this mark I'll tell you it is easy. Theory, accounting process, inventory, BRS, everything, it is easy for you. But from here the actual difficulty level starts. I'll not tell you it is too difficult. If you solve, I don't know, we will solve each and every question in the class itself. We will be trying to solve the question papers as well. So obviously your knowledge would have gone up. So based on that, I'll tell you it is easy to calculate. What are the resources you should study for examination? First only I'll tell you, at the first class I'm telling you, read complete study material. Don't even leave single questions. There is a question paper known as mock test paper. So institute usually releases before the exam. There will be 2 sets, you have to do that. There will be an RTP, which means revision test paper. So that each attempt institute will release the RTP. So we have to read that. So if you read RTP, MTP, study material, previous year questions. So we will be trying to solve some previous year question also. If you do that, you are through. Nobody can stop you from clearing this particular subject. Okay. Next, so without wasting further time, we'll start with our first chapter, which is theoretical framework or the theoretical part of the accounting. So yes, theoretical framework of accounting. So we'll see what is the meaning and scope of accounting. So today's class is completely theory, not even one single number we will use. Everything we'll discuss in theoretical. So because I told you there are two sets of students, commerce, non-commerce. We have to assume that even a non-commerce student and commerce student should understand. So it will be refreshing. So it will be refreshing for a commerce student and it is completely new for a non-commerce. So we will make sure that each one will understand at the same level. So there should be no discrimination in understanding. Okay. So first, what is the learning outcome? We will understand the meaning and significance of accounting, understanding the meaning of bookkeeping and the distinction between the bookkeeping and accounting. So evolutionary process of accounting as a social science, subfields of accounting. So there are certain subfields. We have management accounting, financial accounting, cost accounting. Everything is covered in chartered accountancy. Okay. I told you accounting, CA. They are like husband and wife. A person who is a CA, I told you accounting should flow in his blood. That's it. Identify the various groups from whom accounting information is generated. Understand the relationship between accounting with economics, accounting with statistics, accounting with mathematics, law and management. Each subject is related to accounting. Okay, so we will be using accounting in economics, statistics, mathematics, even law and management. So management also we will use accounting. Next, explain the limitations of accounting. So there are certain limitations that also we will see in the accounting. So appreciate the enlarged boundary of accounting profession and the areas where chartered accountant, that is me and you in the future, play an important role of rendering useful services to the society. So what do we do? So we have our qualification, so we have to do something to the society, no? So it is my responsibility that if something goes wrong in the company, I have to report it. That is my responsibility. Otherwise I would be booked a case. So you would have seen everywhere that chartered accountant is being arrested. So they have done some scam, everything. But it is my responsibility and your responsibility to be vigilant, and we have to follow our code of conduct. So we have a code of conduct in our chartered accountancy that we have to follow. And something goes wrong, we should be the first to report it. We should not wait for the other government agency to come and see. We, as an auditor, as a company chartered accountant, I have to report it. Now, first see this diagram. They are telling what is the procedure of accounting. See, first recording. So to do accounting, it should start with recording, which means you should have something to do accounting. So you have an invoice. So we'll take an example of your computer. So now we'll take an example of mobile. So now you are in very happy mode, and you have cleared +1 +2. Now you have chosen one of the India's toughest subject, toughest course, chartered accountancy. Now you are very much excited. Now to see the classes, online classes, you should have a laptop or a mobile. So we will take an example of mobile. So you took a mobile, take it as Apple. So Apple something 1340, now it is 15, I guess. So you took a Apple 15 mobile. So you took Apple 15 mobile, the cost is around 70,000. You would have got an invoice. From that. So that is the document which you get for recording. So now you are maintaining your account. So as you started your chartered accountancy journey, you want to keep everything on record. So now what do? You took the invoice from the Apple store. You have the invoice. You will record that I have purchased the Apple 14 mobile or 15 mobile at 70,000 today. So you entered it. That is known as recording the transaction. So now you are just entering that you have purchased the Apple mobile. Next, classifying. Now whether you will use that iPhone for 1 day or 1 year or 5 years, it depends. But definitely you will not use for less than 1 year, because you would have paid 70,000, and 70,000 is not a small amount at all. So definitely you would have used for 3 to 4 years. Minimum to minimum, I'll tell you, you will use 3 to 4 years, because you would have paid a very huge amount, and parents definitely will see that you have to use it for 3 to 4 years because the amount is huge. So now we will classify whether it is an asset or an expense. So we'll see what is expense and asset later on, but you have to classify whether it is an asset or an expense. Expense is when it is gone in one day. Example, mobile recharge. So you took a mobile, you do the recharge. The recharge is for 28 days, not more than that. After that, the plan will be closed. So that is known as expense. But mobile is an asset because you will be using for more than 1 year. Obviously more than 1 year. So that is known as classifying. Then summarizing. So we will be making a statement that I have a mobile and this much recharges I have done in an year. That is summarizing. Then we will analyze that, okay, how much time did I do a recharge, what is the cost. If I took the mobile on an EMI, I have to pay an EMI. On EMI, definitely nowadays you have no cost EMI, but obviously you have paid an interest on that. So that is analyzing how much I did. Then interpreting whether this mobile is good for me or bad for me. You took it for the purpose of classes. So for just seeing classes, if you buy an iPhone, is it worth it? Definitely no. You could have gone for an tab. So you would have got a Micromax tab around 20. You would have got Samsung tab for around 30. So that is also useful, no? Because the main aim of purchasing a mobile or a tab is that to see classes. You will not do any photography. No, if you are doing photography, iPhone is okay, but you are using that for only seeing classes. So if the main purpose or agenda is to only see the classes, go for a tab. Why you are going for an iPhone? That is interpretation. Then communicating. So your father would have given you the amount. Then he'll ask that whether are you seeing classes, whether the mobile or a tab which I have given you the amount to purchase, whether it is worth it. So that is communicating. So in business, we communicate the results. What is the result? It may be a profit or loss in a year to the management, to the shareholders, who is the ultimate owner of the company. That is communicating. First, this is the process. Now to record, it should satisfy certain conditions. First one, it should be in economic event. It should be an economic event, and transaction should be measured in financial terms, which means it should be measurable in money terms. So iPhone is 70,000. Good. It can be measured in money. So your mom, so I am teaching you. You would have paid some money for the classes. So I will be teaching you. You would have given me money. That is economic terms. If suppose your mother is teaching you, will you give amount to your mother, or will you give amount to your father if he is teaching? No, that is a non-economic activity which is out of love and affection. So or out of duty. So they are teaching you because you have to, there may be certain concept that you want revision. So your dad is a chartered accountant or a finance professional, he wants to teach you. So he will teach you, but he will not take any amount from you. That is out of love and affection or a duty as a parent. That cannot be recorded as in the accounting, because it is not measurable in the financial terms, which means you don't pay any amount to your parents. Okay, so the main first requirement is that it should be an economic event, which means there should be a transfer of goods or services, which means you are giving me money, I am giving you the classes. That is an economic transaction, which means it is term and it is measurable in the terms of financial terms, which means money. Okay, here the transaction is based on money, but with respect to your parents, it is not in terms of money, which means that cannot be recorded. Now, that is the input. So what is the transaction? Now, purchase of iPhone or a tab, that is the input. So then it will go to the accounting cycle. What is this accounting cycle? First we will record in the original entry, which is the journal. We call it as journal. Journal is the first step of accounting. Okay, journal is the first step of accounting. So please write it down. Accounting cycle. Accounting cycle, the first step is journal, which means we will be recording the transaction. That's it. Next, the ledger. So we will be preparing the ledger. We'll see in detail how to prepare a ledger, how to prepare a journal, each and everything. Then after the ledger, we will prepare the trial balance. So trial balance is the So it is the statement which lists all the balances. So you would have passed the journal. So journal, you will be writing an entry that this account debit to this account credit, that is journal. Then after that you will prepare a ledger. Then the next thing is trial balance. What do we do in trial balance? It is a statement. So we will be it is a statement where we will be having all the accounts. It may be debit balance, credit balance, it can be anything. We will be listing all the accounts. So that is trial balance. Then after that, on the basis of this statement, we will prepare the final accounts. Okay. So I can't go and see what is this balance, this balance. No, I want a summarized form. See, what is the next step? Classifying. It is summarizing. Next, that in final account, first thing is that I'll prepare a profit and loss account. At the end of the year, each company or each owner, each sole proprietor, you and me also, I want to know whether I'm making a profit or loss. If it is a profit only, then it is good for me. If it is a loss, how can I do a business? Now you are investing 10,000 and getting back 8,000. What is the need of doing a business? No, it is not worth it. You could have gone for an FD. If you keep your money in bank, you will get 6 to 7% interest. That is better instead of incurring losses. So that's why we measure our results. So measuring our result is known as profit and loss account. And then we have the balance sheet. What is balance sheet? It is the financial position. How much loan I have, how much asset I have, which means what is that I have in my pocket. So at the end of the year, I have iPhone in my pocket. What if I had taken a loan, I would have some loan balance. So I have to pay the loan, but I have my asset. That is known as balance sheet. And we have one more thing, I'll just write it down. Cash flow statement. Cash flow statement. What is cash flow statement? Simple. In foundation level, we don't prepare any cash flow statement. We prepare only profit and loss and balance sheet. But for your knowledge purpose, I am telling you, cash flow statement is nothing but we will record all the income, all the cash income. Will be making all the cash payment, and the balance would be a closing bank balance. That's it. So that is cash flow statement. And the fourth one we have statement of changes in equity. So equity here means share capital. So there will be certain changes in the share capital. You would have issued the share, you would have redeemed your share. So sometimes, so if you are a stock market enthusiast, so everyone will be making shares now. Everyone will be trading in shares. Each one will be having their demat account. That too after post COVID, everyone is into trading now. You would have heard from your friends. I think even some of you would be actually doing it now. I assume that everyone nowadays, everyone is into trading. They're making trading as their profession nowadays. So they see some 9 rupees video, 10 rupees video, they come and post it on Instagram that I am a trade market enthusiast or trader. So but you should be very careful and vigilant. Okay, so one wrong move can wipe off all your capital or wipe off all your money. So that's why I suggest you go to the market. I'll tell you, go and try stock market, because you should get the market knowledge. So there is a subject in CA final, AFM. So I'll tell you that if you go and see only, you'll get to the practical experience. So reading the theoretical subject or doing some practical problems won't help you. CA should be a practical oriented. Whatever you do, whatever you learn, you actually implement in business. I'll tell you. So profit and loss account, it's not a theoretical subject. You have to do every month. You have to do. Nowadays, companies are making chartered accountants to prepare profit and loss each week. You'll not believe, you have to prepare profit and loss each week. So balance sheet, profit and loss account, these are not concepts which are only in books. We have to prepare daily. If you go to the market, you have to prepare cash flow statement and each thing. So sorry, I was at the statement of changes in equity. So here what do? Here we record the changes in the equity balance, which means I would have issued 10,000 shares. After that, you would have heard the term bonus shares. Okay, bonus shares. So what is bonus share? You get some shares freely. What is bonus? So if you take something, they are giving you extra. That is bonus shares. Then you'd have heard right issue. So these are the terms used in share market. So we'll be discussing those things. Okay. So but for now, what is the statement of changes in equity? So what is the changes between opening and closing balance of a share? So if there is an opening balance of 10,000 and closing balance of 12,000, obviously there is a issue of shares. So how 10 can become 12 if without issuing shares? Obviously they would have issued the share. That is statement of changes in equity. Now preparation of finance statement is done. What do you keep that? Can we prepare and keep it in the box? No, we have to tell our owners, we have to tell our board of directors that this is the result. So output, communicating the information to the users. So who are the users of our financial statement? There are two types of user. One is internal, which means within the company, and which is the second user, which is the external, people like you and me. So now we want to purchase a share of a particular company. First is that we don't go by graph. So as a commerce student or a chartered accountant, I don't go by graph. I see the fundamentals of the company. Like we go by graph. So usually engineering students will do that graph thing. If you open any website, money control or something like that, you have a graph. On basis of that, they put some formulas and all, they'll do. But as a chartered accountant student, we have to see first the fundamentals of the company. What is the fundamentals? We have to check their profit and loss account. We have to check their balance sheet. We have to see their board meetings. So then only we must purchase this share. You do the graph analysis, I don't tell no, but see the fundamentals of the company. First, the fundamentals of the company is important. Okay. So communicating information to users. Who are the users? Internal users, which in the company are board of directors. So you would have heard that board meeting in the stock market. If you are having a shares, you will get the notice also for AGM. Okay, annual general meeting, you'll be getting the notice also. You'll be getting voting, how to vote, everything you'll get on email. So if you have a demat account and if you're having shares of a particular company, internal users are board of directors, partners in case of a partnership firm, managers and officers. So these are some of the internal users who will be using the financial statements. Next, who are the external users? I told you first is the investors. If suppose anyone wants to purchase a share, or obviously he'll do fundamental analysis. First he'll see the balance sheet, profit and loss account, pipeline projects, which means future projects, everything he'll see, then only he'll purchase the share. Then the lenders. So if banks, so usually bank giving you loan, first they will see your balance sheet, how much loans you have, how much capital you have, what is your net worth, everything they'll see. Suppliers, so if it is a bigger company, they want to give you share, they want to give you goods on credit, which means they will send the goods to you today, but they'll not ask you payment today. They'll ask at a future date, after 20 days, 30 days, they'll ask you the payment. So you would have heard cash on delivery, but here it is not cash on delivery, it is credit. It means you have to pay after 1 month. Government agencies like income tax department, GST department, they also want your information, and ND customer. So because now you purchase a subscription of a particular company for 1 year. After 2 months, the company went down, which means the company was dissolved or wind up. So what do? Your amount is gone for remaining 10 months. So that is why customer also analyze your company or your results. So this is the users of accounting information. So now we'll go line by line so that we will not leave any concept behind. Okay. First, introduction. Every individual performs some kind of economic activity. Example, iPhone. Everyone will do some activity now. You'll have food daily, you'll go to the grocery shop, you go to your office, you put petrol, everything is an economic activity. A salaried person gets salary. You and me working for a company obviously will get salary and spends to buy provisions, clothing. These are daily needs. So daily needs you have to spend amount for children education, construction of etc. A sports club formed by a group of individuals, a business run by an individual or a group of individuals, a company running a business in telecom sector, local authority like Kolkata Municipal Corporation, Delhi Development Authority, each one are doing economic transaction only. What is economic transaction? The main agenda here is that economic transaction. They are trying to tell that accounting should be an economic activity which is measured in terms of money. Not necessarily all economic activities are run for an individual benefit. Such economic activity may create social benefit also. What is social? It is doing something, a road, construction of a road to a village. It is a social activity because it will be not only benefit an individual, whole village it will benefit if you construct a road in a village. So here we come to the important word known as transaction or events. So the important word here in the first paragraph is that transaction and event. Transaction is used to mean a business, performance of an act, an agreement, while event is used to mean an happening or a consequence of transaction, a result. So what is transaction? It is used to mean a business, which means you come to me, take a class, which it is a transaction because it is termed, it can be measured in money, or it is an act that you are doing towards me, that you want to purchase an accounting class from us, you are purchasing it. So that is an economic activity or a transaction. Here one transaction took place, which means you are purchasing the class from us to see the accounting class. Okay, next, see, an individual invests 2 lakh in running a stationery business. So we'll take an example. They are telling that I and you are doing a business. What is the business? Stationery business, pens, pencil, etc., highlighters, etc. For that I have made an investment of 2 lakh. So no one will give you on free because you are a newcomer. Obviously, who will give you? That's why they will take. You have to have some initial investment, which is known as 2 lakh. So this I will tell it as investment. On 1st January, he purchases goods for 1,15,000 rupees. So now I have 2 lakh. So investment, I have 2 lakh. From this I am making a purchase of 1,15,000. Understood? So 1,15,000 I purchased and sold it for 1,47,000. See, I purchased it for 1,15,000. Now I am selling it at 1,47,000. Profit. So what is the profit? 1,47,000 minus 1,15,000. So here it is 2. 14 minus 11 is 33. 32,000 I made a profit. Out of this transaction, he pays shop rent at 5,000 and finds that he has still goods for 15,000 in hand. So he has a goods of 15,000. The individual performs an economic activity. What is that? Sale of goods. He carries a few transactions and encounters with some events. Is it not logical that he all wants to know the result of his activity? Obviously no. He has 2 lakh investment. He purchased for 1,15,000 and sold it for 1,47,000. Now he wants to know the result, whether it is a profit or loss. First thing is that I got a profit of 32,000 on sale. On above that also we have made certain expense and income. So what he is doing is that they are telling he has a surplus of 42,000. How? He sold the goods for 1,47,000. Okay. Now above that he has a good of 15,000 which is in hand for him, which means he has not sold, but it will be sold in next day. But today he has not sold, but that is in his stock. So that is known as stock or closing stock. Okay, so that we will add. So he has a total income of 1,62,000. This 15,000 he did not get today, but he'll get tomorrow morning if he sells. So that is why we are recognizing now only, which is 1,62,000 is your income. But what is the expense? First is that 1,15,000 we purchased the goods, and next we paid a shop rent of 5,000. So totally we had spent 1,20,000. What is our income? 1,62,000. So 1,62,000 minus 1,20,000, 42 is your surplus, which means profit. So profit is 42,000. So earning 42,000 surplus is an event, which is it is an outcome of a transaction. See what he told here. What is an event? Means happening as a consequence of transaction. So because of this transaction, because of this particular transaction, we got an event which is 42,000 surplus. Having inventory in hand is another event, while purchase and sale, investment of money, payment of rent are transaction. So what are the, so we had learned two terms, one is transaction, one is events. So what are the transaction? Purchase of good is a transaction, investment of money is a transaction, sale of good is a transaction, payment of rent, it is a transaction. So all these are transaction, and 42,000 what you get as surplus is known as event, because it is a consequence of the transaction. Because of goods sold, because of purchases, because of rent, we got a profit or the surplus, that is event. So it is an outcome of transaction. Next, similarly, a municipal corporation got government grant of 500 lakh for adult education. See, municipal is getting some amount of 500 lakh for adult education, which means education. It spent 250 lakh on purchasing literacy kits, which means maybe books, 200 lakh for tutors, which means teachers, and left with balance of 50 lakh. Obviously, no, you had 500, from that you spend 250 for literacy kit, it may be building, books, something like that, and 200 for tutors, which means teachers. You have to pay salary to the teachers, no one will teach for free because they also have to do something. So 50 is your balance. So out of 500 you had spent 450. Obviously 50 is your balance. Similarly, the central government raised money through taxes. So I and you pay income tax. I think you would have not, you will not pay tax now, as of now. Definitely once you qualify, you have to pay tax, you can't escape. On this earth, two things are compulsory and mandatory, and it will definitely happen. One is tax and one is death. So tax you have to pay. Death it is obvious. Okay, you can't escape from these two things. So taxes and paid salary to its employees. So central government employees get salaries. What is the central government departments? You take IT, income tax, ED, CBI. So these names you will see regularly in newspaper. So that's why I took these names. Regularly you see these names. Then you have the central government other agencies. So they have their so government collect tax from us, they'll pay salary to all of them and spend our developmental authority activities. So what is the development authority activities? Building of road, building of bridge, railway station, airport. So these are all development activities. So these all they do with our money. So that is why public as a large will be contributing to the government to build these things. Whenever receipts of the government are more than expenses, it is surplus. Obviously, no, your dad gave you 100 rupees, you spent 80 rupees, 20 rupees is surplus, obviously. But if the expenses are more than receipts, it is known as deficit. So now, as a commerce student and as a chartered accountancy student, you should do one thing now, you should see budgets. Every year finance minister will present budget at state level, central level, you should see budget. They will be using the term surplus budget, deficit budget. So you have to see these terms. Now you should see completely, you should now involve yourself completely towards these things, budget. Instead of seeing the political news, try to see these news. Budget. The budget, usually finance minister presents the budget at central and state level, as I told. So you have to see that. So surplus budget, which means your income is more, expense is less. Deficit budget is that your expenses are more, which means you're spending more but your income is less. You go to a hotel or some any place with your friends, bill is 120, you all have 100 rupees, that's it. You spent, bill is 120 but you have only 100, 20 rupees is excess. You will tell the hotel that you will be a regular visitor, he'll tell that okay, pay next time. So which means deficit. You had 100 rupees but you spent 120, that is excess of expense over income. Here, raising money through various sources can be termed as transaction, and surplus or deficit at the end of the accounting year can be termed as an event. So whatever expense you make, whatever income you get, that is transaction, and because of that you are getting something, that is surplus or deficit, that is known as event, which is an outcome of a transaction. A telecom company would need to ensure that it is providing services to its millions of users for postpaid, prepaid. So you know what is postpaid and prepaid? Each activity done by a user, it may be a call, message, data usage, results in an economic activity, because you take recharge for that only. Now you have Jio, Airtel, idea. So you make a recharge to 40 to 50 something at that range for per monthly. You make a call, you text, you make a message, you use your data for Instagram, Facebook, Twitter, now X, everything you use the data, YouTube. So that is known as transaction, because it will result in an economic activity. Okay, an entity needs to keep appropriate and timely records to be available to collect money from post-aid connection users for the services availed by them. Likewise, the company will need to ensure that prepaid connection customers are provided the support and records confirm how much balance still it remains to be utilized. So now we have the concept of monthly recharge. Okay, earlier it was not like that. You would have put 20 rupees, 30 rupees, 50 rupees recharge. Now on that you would have got a balance of 42, or for 50 rupees it would be between 42 to 43. And once you call, per minute they used to charge, per minute 60 paisa, per minute 50 paisa, 1 rupee. It was like that earlier. Now it is not like that. You make a monthly recharge, you talk how much ever time you want, it is unlimited. Earlier it was not like that. So once you use it, the balance should come down. So it was like that. So everybody wants to keep records of all transaction and events and have to have adequate information about the economic activity as an aid to decision making. So why do we do accounting? So the main agenda is decision making, whether I have to make this decision or not. Okay, accounting discipline has been developed to serve this purpose as it deals with measurement of economic activities involving inflow and outflow of economic resources. What is this economic resources? Money comes in, money goes out. That is economic resources, which helps to develop useful information for decision making process. So how is accounting helpful? Decision making purpose. So I have the balance sheet, I have the P&L. Now management will make a decision that this particular good is making loss to us. I will discontinue the product. So you would have seen some big companies discontinuing their product because they don't have the profit on that. Example, Ford, they closed their operations in India. Now they are coming back, but they had closed their operation because they were unable to sustain the market. So that was a wrong decision. Like that. Accounting has an universal application of recording transaction. First I told you, recording transaction and events, and presenting the suitable information to decision making regarding any type of economic activity, ranging from family function to functions to a national government. But hereinafter we shall concentrate only on business activity. Non-business we are not concerned. You personal transaction we won't do anything else. Only business transaction we will learn. And their accounting, because the objective of this study material is to provide basic understanding of accounting for business activities. Only business activities. Here we don't see anything on non-business terms. Nevertheless, it will give adequate knowledge to think coherently of accounting as a field of study of universal application. Now, the growth of accounting discipline is closely associated with the development of business world. So, when you enter the actual business world, accounting is very much important. Thus, to understand accounting as a field of study or universal application, it is best identified with recording of business transaction and communication of financial information. What is this financial information? Balance sheet, profit and loss account about the business enterprise to facilitate decision making. The aim of accounting is to meet the information needs of the rational and sound decision makers, and thus called the language of business. Please be vigilant here. What is accounting? It is the language of business. So I and you talk in an English or any mother tongue, but business talks through accounting. Business cannot talk through any other language except accounting. Okay, now we will go with the meaning of accounting. Okay, so now you would be thinking that, so this is an account class, why are we learning theory? I'll tell you 20 to 25 marks will come out of theory. So in examination, what would be the pattern? It will be 100 marks. So 100 marks you have to write. So I think we didn't discuss, we'll see here. See. See, you have 3 hours of time, 100 marks is the question, total paper. So you will have 20 marks of, so you will have 5 questions, each having 20 marks. It may be 10 mark question, it may be 10 into 2 or 15 into 1 plus 5 into 1. It can be any combination, it can be true or false. So usually what will happen in CA, you will have 6 questions, okay. So this will be compulsory, you have to attend it. It may be true or false, it may be a problem, it can be anything, but question number 1 is mandatory, and out of these 5 you should write only 4. Okay, this is the pattern for CA foundation accounting. So first question compulsory 20 marks, and after that you will have 5 questions. Out of this 5, all will have 20 marks each, but you should write only 4. Okay, you have the option only to write 4. So, and one more thing, okay, so I'll just tell you the basics of how marking will happen in CA final. So then we'll go further. So see now, question number 1 compulsory. Okay, question number 1 compulsory. So if suppose you have three questions in first mark, so one may be 10 mark, 5 mark, 5 mark. So this is the first question. Now in exam, once you start with the first question, you should complete all 3. So in earlier, I don't know how was your examination pattern, which means in +1, +2, or even I'm telling for a non-commerce graduate. In CA, what do? Once you start with question number 1, you have to complete all the 3, then only go to question number 2. So if you complete, it can be 1A, you do 1B, 1C, or it can be any combination between these. So 1C, 1A, 1B. It can be any combination between question number 1. You cannot now come to question number 2. You have 2 questions, A and B. Now once you start with question number 2, you have to do question number 2A and B, then only go to next question. Now you did 1A, now you can't go to 2B. You can't do that in CA examination. I'll tell you, you will not get the marks. If you start with question number 1, you have to complete all the 3 questions in question number 1, then go to question number 2. So question number 2, then you should start A and B. This is the correct pattern. Okay, that's why I'm telling you in the class 1 itself. That's how you write the exam in CA final. CA, any level, you take it final, intermediate, foundation, any level. You can't start with 1A, 2B, 3C, 4A, again 1B. No, this is not acceptable in CA. Okay, you have to go with the flow. So because we are professional, right, you have to be logical. This is not a graduate level exam or a +1, +2 exam. This is CA. There is certain requirement from your end. We should be ethical, or our answer should be presentable to the board of directors, which means now you should write your exam as if you are writing a project report or a financial accounting to the board. Even board should understand. Now you can't prepare profit and loss here again, then do balance sheet at the last sheet. No, that is not acceptable. As I told, in CA, once you start with question number 1, you have to complete all the questions in question number 1, then go to question number 2. But after completing question number 1, can I go to question number 3? Please go. No one will stop you. But once you start with question number 1, complete all the 3. Then you go to question number 3. Do B and C, then do A, no problem. After completing this, again come to question number 2. No one will question you, but it should be in order. That is what I am telling. Okay, I hope you understood. So what is this? What is the examination pattern? Examination pattern, if you want, you can write it down. So first question number 1, compulsory 20 mark. Then question number 2 to question number 6, write any 4. Write any 4 questions from total 5 questions. But note, once you start with any question, you need to complete all sub questions. I told you ABC, all sub questions in that question, which means if you start with question number 1, complete ABC, then go to question number 2. You can't start in between. Okay, please follow this at every level of your course. It may be foundation, intermediate, or final. You should follow this every time, so then only you'll get the marks. And if you know all the 6 questions, don't write all the 6, please. I'll tell you now only, don't write all the 6, because institute will consider the least one. So this is the drawback of writing all the 6 questions. So example, I'll tell you an example also. You are a bright student, 6 questions you wrote, so 10 marks. I'm sorry, I'll write here 15, 14, 12, 10, 18 and 9. So institute will consider the least marks, so it will consider 9. It will start from 9. That's why don't write all the 6. If you had skipped this, if you didn't write this, see what is the total. So 15, 30, 40, 50, 58, 62, 64, 69. See 69. If you had taken the either way, they would have ignored this, they would have considered 9 marks. So that is why please be careful. Okay, don't take risk. If you know, write only to the point, don't write stories and all. Oh, then one more thing I forgot to tell, maximum try to quote what is given in the study material. Don't write your stories what you write in graduation level and all. Don't write big stories. Answer to the point, that's it. 5 marks, answer to the point. Don't write stories. Okay, now coming back, the Committee of Terminology set up by the American Institute of Certified Public Accountants, CPA, you would have heard the term CPA, formulated the following definition of accounting in 1961. See, in 1961 they defined what is accounting. What is that? Accounting is an art of recording, which means how do you record, classify, summarize in a significant manner. So first record, classify, summarize in a significant manner, and in terms of money. I told you it should be in terms of money. Father and mother teaching his son, it is not accounting. In terms of money, transaction and event. So we saw what is transaction, we saw what is event, we saw the example also, which are in part at least of financial character, and interpreting the result thereof. Interpreting result means financial statements. So this is the definition of accounting. What is the definition of accounting? Accounting is the art of recording, classifying and summarizing in a significant manner and in terms of money. See, I'm underlining main words, okay? Recording, classifying and summarizing in a significant manner in terms of money. It should be in terms of money. Non-monetary things we cannot record. And it should be a transaction and event. What can be a transaction? We discussed previously. Purchase of iPhone, it is a transaction. Seeing classes, it is a transaction. Events, which is an outcome of a transaction. So if you see previously the surplus out of the business, it is an event which at least are of a financial character, which means it should be in financial terms. It should not be vague. It should be a financial character and interpreting the result thereof. Okay, this is accounting. Now we will go further. As per the definition, accounting simply means art of record keeping. How do we record the transactions? The process of accounting starts with first identifying the events and transactions which are of a financial character and then be recorded in the books of account. So first we have to identify the transaction or event which is in money terms, which means it should be in terms of money or financial terms. Continuing with the example of a telecom company which needs to capture all the transaction made by an user, raising invoice to the customer. So if you do a recharge, you will get an invoice on your email. If you do through apps, maybe Paytm, PhonePe, something like that, you will get an invoice on your email. Please check it. So next time when you do a recharge, please check it. You will get an invoice or at least a mail that you have made a payment. So receipt of money towards salary, marketing, etc. Likewise, the individual running the stationery business would record all the business transactions. So I told you everyone doing business will record the transaction. The recording is done in journal or subsidiary books, also known as primary books. So they may ask in true or false, what is primary books? The recording is done in journal or subsidiary books. Every good bookkeeping system includes suitable classification of events. So next step is C, classification. So after recording, next classification and events as well as the summarization. See, summarize for ready reference. For example, a telecom company performing thousands of transactions on daily basis is not expected to publish all those transactions for users to be able to make a decision. Surely those transactions need to be summarized approximately. So now I made 100 sales in one day. Can I see each? No, what I'll do, I'll take a summarized form. I'll take the total sales at the end of the day. That is enough for me. Instead of seeing 100 transactions each time, I can take a total that this much sales have done. That is summarization. Next, after the transaction and events are recorded, first thing I told, no, first recording, they are transferred to the secondary books, which is the ledger. So we'll see what is ledger. So ledger, we will be recording all the transactions of a similar nature. So iPhone will have one ledger. So if you purchase iPhone, it will be there. If you make a payment to the iPhone, it will be there. If you make any services or update or something like that, iPhone, no, that will be recorded in the iPhone ledger only. If you take a charger, you can take it in the iPhone ledger only. So that is ledger, means all similar transactions will be accumulated in one place. That is known as ledger. In ledger, transactions and events are classified in terms of income, expense, asset, liability according to their characteristics and summarized in the profit and loss account and the balance sheet. Essentially, transactions and events are to be measured in terms of money. Measurement in terms of money means measuring the ruling currency of the country. So in India, whatever we do in rupee terms, which means the official currency of India is rupee. If you do in US, it will be US dollar. If you do in Japan, it is yen. Okay, so depending upon the country's currency. For example, rupee in India, dollar in USA, and like. The transactions and events must have at least in part financial characteristics, which means it should be a financial characteristics, which means in terms of money, it should not be vague. The inauguration of a new branch of a bank is an event without having financial character, while the business disposed of, which means here we don't spend any money on opening. No, we have purchased asset and all, no, but opening of a new branch is not a financial nature. But while the business is disposed of by a branch is an event having financial character. Accounting also interprets the recorded. So next, after recording, classifying, summarizing, we interpret the transaction of recorded, classified and summarized transaction and events. However, the above mentioned definition does not reflect the present day accounting function. So this definition is not having the present day function. What is that? According to the above definition, accounting ends with interpretation of results of the financial transaction and events. But in the modern world, with the diversification of management and ownership, earlier we used to have one type of business, which is sole proprietorship. Now if you see, we have partnership, we have LLP, we have joint venture, we have company, we have a public company, we have a listed company, we have so many types of business. Globalization of business, which means now presence of one company is in more than one country. Infosys, Wipro, they have their presence in many countries, and society gaining more interest in functioning of the enterprises. The importance of communicating the accounting results has increased. So now people seeing accounting has increased. So earlier, who used to do stock trading? Big people used to do it. Now everyone will do. Everyone has a demat account post COVID. Therefore, this requirement of communicating and motivating informed judgment has also become the part of accounting, as defined in widely accepted definition of accounting given by the US Accounting Association in 1966, which treated accounting as. So now we come at the second definition. Who has given the definition? American Accounting Association. So they have their own definition. We'll see that also. The process of identifying, measuring and communicating economic information. Wherever you go, this word will come, economic or money terms, which means accounting cannot happen without money, to permit informed judgment and decision by the users of accounts. In 1970, Accounting Principle Board. So this is the board which will give us the standards of American Institute of Certified Public Accountants enumerated the function of accounting as below. The function of accounting is to provide quantitative information. See, quantitative means which we can measure, 1 kg, 2 kg, we can measure. But love and affection, can you measure? No, it is not possible, because how can you measure it? That's why quantitative information, primarily of financial nature. See, again financial nature, about economic entities, that is needed for useful in decision making, economic decision. Okay, next. Now we saw all this. Now we'll come to the exact definition of accounting. So we saw this is start with recording, classifying, summarizing, everything. But now comes the main definition. See, this accounting may be defined as the process of recording, classifying, summarizing, analyzing, and interpreting the financial transactions, which means in money terms, and communicating the results thereof to the persons interested in such information. See, the first diagram we saw now, that is the main definition of accounting. What is accounting? First we record the transaction, then we summarize the transaction, then we analyze, then we interpret the financial transaction. So we interpret based on whether it is a profit, loss, we have the financial position. And what do? We don't keep it for ourselves, we'll communicate. What do? We communicate the results, whether it is a profit and loss, to the person interested. Who may be the persons? It may be internal, external. If it is internal, board of directors, owners, etc., or the officers or employees. If it is an external transaction, investors, government agencies, suppliers, or lenders. So these are the users. The above definition requires accountants to assume bigger responsibility than merely doing bookkeeping. So bookkeeping anyone can do, but bigger responsibility that how to record a transaction. Accountants need to be ready to provide information for the intended users to be able to make economic decision. Now we will see each one in detail. One of the basis of above definition, the procedure of accounting can be divided into two things. First, how do we generate the financial information and using of financial information. So generating and using the financial information. So these are the two steps. First we have the generating financial information. This is the first step. How do we generate? See, what is the first step of accounting? First we should record the transaction. Recording, that is important. This is the basic function of accounting. All business transaction of a financial nature as evidenced by some document. What can be the document? Purchase bill. So if you buy an iPhone, what is the evidence you have? Bill. That is in evidence. Such as sales bill, passbook, salary slip, etc. are recorded in the books of account. So on the basis of sales invoice, we will record the transaction in the books of account. How do we record? That we will see in the accounting process. So here we'll just go to the basic stuff. Recording is done in a book called journal. See, journal is the first source of book. So here we will record for the first time journal. This book may be further divided into several subsidiary books according to the nature and size of the business. So if it is a small organization, journal is enough. If it is a bigger organization, which means in one day we have to pass lakhs together journal entry, it is not possible. At that situation, you have to maintain subsidiary books. Each sale book, purchase book, cash book, expenses, each one you have to have a separate book. So we will learn that in the chapter number 2. So we have recorded the transaction. Next, what do? We classify it. What is the type of expense? What is the type of asset is it? Whether it is a capital asset or a normal current asset. We have to see all those things. Now classify. Classification is concerned with the systematic analysis of the recorded data. So once the data is recorded, we have to make a systematic analysis with a view to group transaction or entries of one nature at one place so as to put information compact and usable. Now I have made a sales transaction, I have made a purchase transaction. If everything is recorded in one place, how do I see it? How it is even possible? I have to check line by line that which is sales transaction, which is purchase transaction. I have to see line by line instead of separating or classifying it that this is a sales transaction, this is a purchase transaction. Now if I want anyone, I'll go there. If I want sales, I'll go here. If I want purchase, I'll go here. So that is the main use of classification. We have to classify the data. The book containing the classified information is known as ledger. I told no, ledger will have similar type of transaction at one place, that is known as ledger. The book contains on different pages individual accounts heads which all financial transaction of similar nature are recorded. I told no, similar nature. It should be similar. All purchases at one place, all expenses at one place, all assets at one place. So these are the similar nature. For example, there may be a separate account for salaries, rent, printing and stationery, advertisement, etc. Each one will have different place or different location. All expenses are under these heads. After being recorded in that journal, will be classified under separate heads in the ledger. This will help us finding out the total expenditure incurred under each of the above heads. So this, how do we prepare a ledger, how do we pass a journal, everything will be covering it in the chapter number 2. Here only theory. Next we recorded, we classified it under ledger. Now we have to summarize it. Now that also we need to do. Now it is concerned with preparation and presentation of classified data in a useful manner to the internal as well as external user of the financial statements. This will lead to the preparation of financial statements. So in accounting, we normally do balance, we do everything for 1 year. So profit and loss we prepare for 1 year. Normally in India, what is the period? 1st of April to 31st of March. This is the accounting period or financial year. In normally India, what is the financial year? It is 1st of April to 31st of March. Okay. So for 1 year, whatever we make transaction, that will make a statement, that is known as profit and loss or balance sheet. Okay. So all those expenses, all those incomes will go to profit and loss account. All the assets, all the liabilities will go to the balance sheet. Analyzing. The term analysis means methodological classification of data given by the financial statements. The figures given in the financial statements will not help anyone unless they are in a simplified form. So you have given the profit, but we have to see how the profit arrived, how much is the sales, how much is the purchase, how much is the expenses. So all those things we have to see. For example, all items related to fixed assets are put at one place, while all items relating to current asset are put at another place. What is this fixed asset, current asset? So any asset, if you are using for more than 1 year, it is fixed asset. Example, mobile. Any asset less than 1 year, if you are using, that is current asset. Example, inventory. You take it today, you sell within 1 year. Obviously, you will sell within 1 year. Next, are put at another place. It is concerned with establishment of relationship between the items of profit and loss account and balance sheet. That is, it provides the basis for interpretation. So student will learn this aspect aspects of financial statement at the later stages of chartered accountancy. Now we are happy because it is not covered in the CA foundation stage. Happy? Next, interpreting. This is the final function of accounting. It is concerned with explaining the meaning and significance of the relationship as established by the analysis of accounting data. The recorded financial data is analyzed and interpreted in a manner that will enable end users. Who are the end users? You, me, company owners, etc. will make a meaningful judgment about the financial condition and profitability of the business operation. So whether the firm is profitable, whether it is loss, whether I should continue with this, whether I should go with this product or discontinue it. So I have 3 products, 4 products, something like that. The financial statement should explain not only what happened but also why it happened. So now I'll tell that loss. the business is under loss. I should tell how is that loss happening, whether it is because of low sales, whether it is because of higher cost, I have more of indirect expenses, whether I am paying more to my suppliers than other suppliers. We have to tell happened, okay, I accept there is a loss, but I have to tell why it also happened. No, that is what owners expect from us, and what is likely to happen. So I'll also tell that if we are not taking decision now only, that this thing also may happen in the future, that also I need to tell. Communicating, all done. Now I have to tell it to the owners what happened. It is concerned with transmission of summarized, analyzed and interpreted information to the end users to enable them to make a rational decision. This is done through preparation and distribution of accounting reports, which includes besides usual profit and loss account. So normal accounting report is profit and loss account and balance sheet. Additional information in the form of accounting ratios. So we will see net profit ratio, gross profit ratio, everything we will see. Some graphs, diagrams, so which means we can prepare a graph that sales was going up, coming down, going up, something like that. We can prepare a graph, fund flow statement, etc. So this fund flow and all, it is covered at a later stage. Okay, students will learn these aspects at the later stages of chartered accountancy. So when you go to an intermediate or final level, you will see how to prepare a accounting ratio, graphs, diagrams, fund flow statements, etc. The first two periodical procedure of process of generating the financial information along with the preparation of trial balance is covered under bookkeeping, while the preparation of financial statement and its analysis, interpretation and also communication to various users are considered as accounting stages. Student will learn the term bookkeeping and its distinction with accounting in the upcoming topic. So here we do the basic thing. What we do in foundation level is that we'll only record transaction, we'll prepare ledger, we'll prepare TB, we'll prepare balance sheet. That's it, not more than that. We won't do any accounting ratios and all at this level. Using the financial information. Who will be using the financial information? Next, there are certain users of accounts. Internal, external, we saw earlier. Earlier it was viewed that accounting is meant for proprietor or owner of the business. So only owner who is doing the business, we assume that it is only for his purpose, but not now. It is changing. But changing social relationships diluted the earlier thinking, since earlier business were simple and not scaled. So earlier, I don't know, everyone used to do sole proprietorship business. Now it is not like that. We have entered into partnership, we do a company business, we do a joint venture, etc. Probably that view could hold true for those. It is now believed that besides the owner or the management of the business enterprises, users of accounts include. So in exam they may ask who are the users of accounting. Investors, one who wants to invest money into the business. You and me, employees, because I have to get an extra salary, increment, appraisal at the end of the year. So that's why I also want the accounting information. Lenders, if a bank wants to lend money to the company, they also want to check the business whether it is profitable or not. Suppliers, whether if I sell goods on credit to you, which means I'm not expecting cash payment immediately on delivery of goods, so you make me payment after 30 days, 45 days, it's okay. They have to check the financial status of the company. If it is a bankrupt, gone, your goods is gone. Customers, government and other agencies. So customer also check. I told no example of a subscription model. You took subscription for 1 year, after 3 years the company is gone, a subscription is wasted. Next, government. So government also will see, because they have to come up with plans now. You know, Startup India, it was an initiative taken up by the government of India. So it is based on the requirement. So if they have the information in hand, they can come up with new scheme. They have the MSME scheme. So these are schemes which are initiated by the government for the welfare of the business and other agencies and public at large. So even we are accountable for the public also. So see, if the airline company borrows money from the bank, buys oil from the oil companies, sell tickets to customers, has staff to be paid salaries, all these group of people and entities are key stakeholders in the airline business. See, one airline business, how many people are related? Oil companies, bank, customers, employees, these many peoples are involved here. They would like to know and understand whether the business of a company is going well or there are challenges for company to run the business. Accounting provides the art of presenting information systematically to the users of accounts. Accounting data is more useful if it stresses economic substance rather than technical form. So accounting data will be useful when it is stressing economic substance, which means in terms of money rather than technical form. Next, information is useless or meaningless unless if it is relevant or material to the user section. So now I am a user. So if you give, I am a user of automobile. So if you give me information of a pharmaceutical company, what is the use for me? Because I'm an automobile company. I don't want information about pharmaceutical. Okay. So it should be useful and meaningful. The information should be free from any bias. So you should not make a polarized opinion. So you should be unbiased. The user should understand not only the financial results depicted in the accounting figures, but also should be able to assess the reliability. So at that stage we come into picture. So I will sign a document telling that this is an audited financial statement, you can rely on this. Then only people will agree. Compare it with the information of alternative opportunities and the past experience. The owner or the management of the enterprise, commonly known as internal users, they are known as internal users, use accounting information in an analytical manner to take valuable decisions in the business. So the information served to them is presented in a manner different to the information presented to the external users. So internal users will give more information, but external users will give how much ever required, not more than that. Even a small details can affect the internal working. So a company will have a trade secret that they cannot give it to the external users. They will have to keep it inside only. Okay. Of a business are given in the management report, while the financial statements presented to external users contain key information regarding asset, liability, capital. That's it. So they'll give limited information which the statutory authority tells. What is the statutory authority in India? We have income tax department, we have Ministry of Corporate Affairs, GST department. What they have specified, only those things we can give, not more than that. Because one small disclosure will affect the company adversely, because one trade secret, if it goes out, they are washed out. That's why. Now we have the evolution of accounting as a social science. So accounting finds its roots as early as around 4000 BC. See, accounting is not from yesterday or day before yesterday. It was around 4000 BC, where Egyptians used some form of accounting for their treasuries. The in charge of treasuries had to send day-wise report to their superiors known as wazirs, and monthly reports were sent to the kings. Babylonia, known as the city of commerce. So see, this they can ask maybe in MCQs. We can't guess, no. In CA, don't make selective study. Read 100%. No selective study in CA. I am telling at the beginning, no selective study. Used accounting for businesses to identify the losses that took place due to frauds and lack of efficiency. Greece used accounting to divide the revenue received among the treasuries, maintaining receipts, payments, and balance of government financial transactions. So here they are telling how accounting originated. That's it. Romans used memorandum or day book where receipts and payments were recorded. So Romans also used it. So see, Egyptians also used it, on the Greece people, and even Romans. Next, China used sophisticated form of government accounting as early as 2000 BC. See, China also was using around 2000 BC. Accounting practices in India could be tracked back to period where Kautilya, minister of Chandragupta, wrote a book known as Arthashastra. So this is a very important book. Many decisions in the current period are taken based on this Arthashastra only, which also described how accounting records have to be maintained. So this one book gives information about many things in India. Luca Pacioli, A Franciscan friar, which means a merchant class book. Summa di Arithmetica, Geometria, proportionality, which is the review of arithmetic and geometric proportion in Venice in 1494, is considered as the first book of double entry. So, which is the first book of double entry? Which is Summa di Arithmetica and Geometria. Okay. A portion of this book contains knowledge of business and bookkeeping. So it has a knowledge of business also, bookkeeping also. He used the terms debit and credit in his book. So this is the age where debit and credit came into picture. So we'll see what is debit and credit at a later stage, but where is the origination? It is from this particular book. In his books, these were the concepts used in Italian terminology. He was an Italian mathematician. Okay, so that's why these were used in the Italian terminology. Debit comes from Italian debito, which comes from the Latin word debita. Okay, and debio which means owed to the proprietor, which is amount owing to the proprietor. Credit comes from the Italian credito, which comes from the Latin word credo. So every word it will come normally from Latin. Okay, so we'll just mark it in a different color so that you can understand. So debita and credo. So these are the root words where it came from, Latin words, which means trust or belief in the proprietor or owned by the proprietor. In explaining the double entry system, Pescioli wrote that all entries have double entries, which means in accounting there is a word that for every debit there should be a credit. That means if you make one creditor, you must make some debtor. He also mentioned that merchants' responsibility is to give glory to the God in their enterprises, to be ethical in all business activities and to earn a profit. So he should be ethical, he should have the responsibility to give glory and earn a profit. So every business has two objectives: wealth maximization and profit maximization. He discussed the details of memorandum, journal, ledger and specialized accounting procedures. In its oldest form, accounting aided the stewards to discharge the stewardship function. A wealthy man employed stewards to manage their property. The stewards in turn rendered an account periodically for their stewardship. This stewardship accounting was the root of financial accounting system. So see one more information. Stewardship accounting is the first source of financial accounting, which means in terms of money. Although double entry system was followed, stewardship accounting served the purpose of businessmen and wealthy persons at that time. In most of the countries, stewardship accounting was prevalent till the emergence of large scale enterprises, which means once large scale enterprises came into picture, which is the multinational companies, this went off in the form of public limited companies. In the second phase, the idea of financial accounting emerged with the concept of joint stock company. I don't know what is joint stock. A company having common seal, okay, ownership, and it is perpetual succession, which means one guy. So take example of Reliance. Dhirubhai Ambani did the company, but it is now taken over by Mukesh and Anil. Now after that, Anant Ambani and Anant Ambani, same like that. And with the concept of joint stock company, divorce the ownership from the management. To safeguard the interest of the shareholders and investors, disclosure of financial statements. Mainly, what is a financial statement? Now we are seeing this 100 times. What are the financial statements? Profit and loss and balance sheet and other accounting information was molded by law. Financial statements give periodical performance report by way of profit and loss account, financial position, which is nothing but balance sheet, at the end of the period by way of balance sheet. It got the legal status due to the changing relationship between owners, economic entity and managers. With the democratization of society, the relationship between enterprise was on one hand. So here it is not much important. So here comes the important line. Financial accounting emerged as an information system to identify, measure, communicate useful information for informed judgments and decision of the broad group of users. So financial accounting came into picture to provide us the first. It started with identification, measuring and communicating the useful information. Here information refers to financial information. Okay, financial information. In the third phase, accounting information was generated to aid the management decision making in particular. It contributed a lot of quality of management decisions. So management means the board of directors. How do they take decision actually? They take decision based on the information in hand. So now they have we are a company making 3 products A, B and C. Now previously A and B has performed exceptionally well, but C is underperformed, which means we are not getting the expected profit. Now as a management, I should take a decision that whether C should be continued or C should be discontinued. So this is with the help of accounting information. Okay, the new dimension of accounting is called management accounting. So I told you in management accounting this comes, and it is the development of 20th century only. It is pervasive enough to cover all the spheres of management decisions. Lastly, social responsibility accounting. So we should be socially responsible to the society, because society has given too much to us, so we have to give something back to our society, no? Lastly, social responsibility accounting is a formative process which aims at accounting for social cost incurred by business as well as social benefit created by it. It emerges from the growing social awareness about the undesirable byproduct of economic activity. See, now you are a manufacturing company of chemicals, so you will produce chemicals, but you will have some waste also. You would have learned this at your younger age, around 4th, 5th grade. You will be learning, you would have seen a picture that there is a lake. At one end they will be washing clothes, and one end a buffalo or a cow will be drinking water, and from the other end a factory is giving or putting wastages to that particular lake. So this, you have the picture, no? You have the picture in your mind. So social responsibility accounting is that economic activity, I accept your company is making profit, but sometimes there are undesirable byproducts. So this is one of the byproduct, wastage. While earning profit, the enterprise incurs numerous social costs. What is that? Pollution, using the resources of society like materials, land, labor to compensate the social cost. In today's world, the enterprise is expected to generate some social benefit. So nowadays company are expected to make CSR expenditure, which is corporate social responsibility, which means they have to take some percentage of their profit to the welfare of the society. So nowadays, if you see here nearby, you would have seen an hospital donated by some big company, some school infrastructure, some roads they would have given to the roads, they would have planted some trees in a park. So these are some of the activities. Also, like employment opportunities, recreation activities, more choice to the customer at reasonable price, better quality products. Therefore, it is demanded that the accounting system should produce a report using the social cost incurred and social benefits generated. So social science study man as a member of the society. They concern about social processes and results and consequences of social relationship. The usefulness of accounting to society as a whole is the fundamental criteria to treat it as a social science. Because of accounting, people at a large or public at a large will benefit from it. So that is why it is a branch of, or it is a social science. Although individuals may benefit from the availability of the accounting information, the accounting information system generate information for social good also. So they told, no, social benefit, social cost. So pollution is a social cost. Now you take a government school and develop and give computers, etc. That is a social benefit for you. Your brand image will go up. It serves social purpose. It contributes for social progress. Also, it is being adapted to keep pace with social progress. So accounting is treated as social science. So now in examination they will ask a question. Accounting is treated as an social science. Please validate or evaluate. So you can write this answer. So you can explain all this social cost, social responsibility, etc. This is the answer for that. Now accounting, we know what is meaning, everything, we saw the social accounting, everything. But what is the ultimate objective of accounting? Why do we do accounting actually? So here comes our answer. Systematic recording of transaction. So first is that we will systematically record our transaction. So the basic objective of accounting is to systematically record of financial aspects of business transaction. That is bookkeeping. So in bookkeeping, we will be recording all the transactions. These recorded transactions are later on classified and summarized logically for the preparation of financial statement. First, the main agenda is we will systematically classify the record or systematically record the transaction. Ascertainments of results of the above transaction. So once recorded, can we keep it simply? No, we have to find out the result of it, whether it may be a profit, loss, financial position, etc. Accountant prepares profit and loss account to know the results of the business operation for a particular period of time. If revenue exceeds expenses, it is said to be that business is running profitably. I told no, income is more, expense is less, obviously in profit. But if expenses exceed revenue, it can be said that the business is under loss. So nowadays you'll be hearing that startup in India are mostly under loss because their expenses is more, income is less. That's why they're under losses. The profit and loss account helps the management and different stakeholders in taking rational decisions. For example, if the business is not proved to be remunerative or profitable, the cause of such state of affair can be investigated by the management. So if it is going under loss, so we can investigate why this particular product or this particular department is going under loss, and they can take a remedial action. Next, ascertainment of financial position, which means what is the net worth of your company, what is the assets in hand, what is the liabilities in hand with the company. A businessman is not only interested in knowing the results of the business in terms of profit and loss for a particular period, but also is anxious to know what he owes, which means liability, what I have to make payment, whether it may be lenders, it may be suppliers, creditors, etc., or for a particular period, but also anxious to know what he owes to the outsiders and what he owns, which means what is the asset I am having, what is that thing I have right on. So I have a right on iPhone, I have a right on laptop, I have a right on monitor, camera, etc. To know this, accountant prepares financial position statement, popularly known as balance sheet. The balance sheet is a statement of assets and liabilities, what you have right and how much amount you have to pay of a business at a particular point of time, and helps in ascertaining the financial health of the business. So now asset is less, you have loan more, obviously your financial health is not well because you have to pay more to the suppliers, but you don't have that specific asset only. Providing information to the users of rational decision making. So you are a rational person, you make investment in my company, obviously yes. Accounting as a language of business. So see, the way of communication between you and me is simple language, English. But how do companies or business communicate? It is through language of accounting. So that's why we call it as language of business. Accounting is the language of business. Communicates the financial results of an enterprise to various stakeholders by means of financial statements. Accounting aims to meet the information needs of the decision makers and helps them in rational decision making. To know the solvency position. What is solvent? Solvency position is that I am at a situation to pay all the debts. So now, if suppose I have taken a car, I have a monthly salary, I can pay the loan, I can pay the EMI. So there are certain persons who are doing business and they will be not able to repay the EMI. So that is insolvency position. So by preparing the balance sheet, management not only reveals what it owes to the enterprise, but also gives information regarding the concern's ability to meet its liability. Meet its liability in the sense, pay the liabilities. In short run, liquidity position, and in long term, solvency position, and as and when they fall due. Now second is the EMI. So whether I will be able to pay the EMI, yes, you are in a solvent position. If you are not unable to pay, insolvent. Now, so these are the objectives which we saw now. Systematic recording of transaction. So here we do bookkeeping, journal, ledger, TB. Then ascertainment of results. So we profit and loss, balance sheet. Ascertainment of financial position is nothing but the balance sheet, and communicating the information to various users, it is the financial reports. So these are the objectives of accounting. Now we'll go to the function of accounting. What is the function? So the main function of accounting is that the first one is the measurement. So here we measure everything in monetary terms. Accounting measures past performance of the business entity and depicts the current financial position. So what it was in the past through monetary terms, whether it was a profit, whether it was a loss, whether we are able to pay the debts, how much asset we had, everything we measure. Then forecasting, what will happen in the near future, that also we need to check now. Accounting helps in forecasting future performance and financial position of the enterprise by using past data and analyzing trend. Now take an example of sales. So it was like this for past 5 years. Obviously we expect that it will go up only, except some scenarios, so like COVID and all, that was unanticipated, but we can guess that it will go up now using the past trend if there is no adverse market condition. Also, decision making, accounting provides relevant information to the users of accounting to aid rational decision making. Comparison and evaluation, so you can compare within the company or between two or more companies. Accounting assesses performance achieved in relation to targets and discloses information regarding the accounting policy and contingent liability. So what is contingent liability? It may happen or may not happen, that we cannot tell it today. That is why it is contingent. It may happen or may not happen, which play an important role in predicting, comparing and evaluating the financial results. Next we have the control. Control, accounting also identifies weakness of the operating system and provides feedbacks regarding the effectiveness of measures adopted by the to check such weaknesses. Government regulation and taxation. Accounting provides necessary information to the government to exercise control on the entity as well as collection of tax revenue. So government also has an eye on the business because you can evade the tax. So every day you will see in newspaper that there was a tax evasion of this much, there was a GST false registration, they took the input tax credit. So government will also see the accounting information. So here now completes the backdrop of accounting. We saw the functions, we saw the definition. Actually first we saw the definition. See, first the definition and meaning of accounting, then we saw the procedural aspects. So we saw each term differently: recording, classifying, summarizing, interpreting, communicating. We saw each terms in detail as per the definition. Then the using of financial information, who are the users, internal, external. Then evaluation as a social science. Then we saw the objective and the functions of accounting. So here we completed the basic of accounting. Now we'll come to the next part, which is the bookkeeping. So after accounting, we'll next jump into the concept of bookkeeping. So what is bookkeeping? So you make notes of this class, that is bookkeeping. So now we'll be discussing some important points. You'll be making some notes. That is nothing but bookkeeping. So in accounting, what do? We record the transactions. So that is known as bookkeeping, where we enter the financial data or the accounting data, that is known as bookkeeping. Bookkeeping is an activity concerned with recording the financial data relating to the business operation. So here we record only financial data, not non-financial data, only related to business operation, not for personal purpose, in a significant and orderly manner. It covers the procedural aspects of accounting work and embraces the record keeping function. Obviously, bookkeeping procedures are governed by the end product, that is the financial statement. So what is the end result? Financial statements. How do you want information for that? On that basis we keep the books. Okay, the term financial statement means profit and loss account, balance sheet and cash flow statement, including schedules, notes forming part of account. So towards the end, when we prepare accounting financial statement of a company, I'll try to show a financial statement of a bigger company, how it looks, how they prepare for profit and loss, how they prepare balance sheet. So we'll see. So they including notes and schedules. Next, bookkeeping also requires suitable classification of transaction and events. This is also determined with reference to the requirement of financial statements. A bookkeeper may be responsible for keeping all the records of a business and only a minor segment such as position of customer accounts in a departmental store. Accounting is based on a careful and efficient bookkeeping system. The essential idea behind maintaining bookkeeping records is to show correct position regarding each head of the income and expenditure. A business may purchase goods on credit as well as on cash. So I told now business can do both things. They can purchase on cash also, they can purchase on credit also. When goods are bought on credit, the record must kept person to whom the money is owed. So when you record a credit transaction, which means you purchased now but you're making payment at a later time, but you have to record the transaction. Goods anyhow you will record, but the person whom you owe, which means whom you have to make the payment, that also you should record. The proprietor of a business may like to know from time to time what is the amount due on credit purchase and to whom. So the owner will ask that what is the amount that is due and how much should be paid and whom it should be paid, so that because he can make his necessary arrangements to source the finance for that. If proper record is not maintained, it is not possible to get the details of the transaction in regard to the income and expense. At the end of the accounting period, the proprietor wants to know how much profit he has earned and loss has incurred during the course of the business. Obviously, every businessman wants to know. For this, lot of information is needed which can be gathered from a proper record of transaction. Therefore, in bookkeeping, the proper maintenance of books of accounts is indispensable for any business. Okay, so they have to keep their books of accounts. So now at this level, the major concern of this curriculum is with bookkeeping and presentation of financial statements. So now, as I told you, at this foundation level, the what the expectation from the institute is simple. You have to know how to keep the books, which means how to pass a journal, how to prepare a ledger, etc., and how to prepare a financial statement. It may be of a proprietor, NGO, company. That's it. It seems important to mention at this point that bookkeeping and preparation of financial statement have legal implication also. Maintenance of books of accounts and the preparation of financial statements of a company are guided by Companies Act. So Companies Act tells us that how we should prepare our books. So how we have to, what is the financial statement format, how the P&L should be, how the balance sheet should be, each thing Companies Act will tell us. In India, banks and insurance companies are governed by special act because bank is governed by RBI. In India, RBI will tell that, and for insurance companies it is IRDA. So they have their separate act and they will follow that governing these institutions and so on. However, for sole proprietorship and partnership business, there is no specific legislation regarding the maintenance of books of account. So for partnership we have a act, partnership act, but it does not tell you how to maintain the books. It is as per the normal accounting. Okay. Now, what is the objective of bookkeeping? Obviously, first, recording of transaction. It is concerned with complete and permanent record of all the transaction in a systematic and logical manner to show it the financial effect on the business. So we have to record each and every transaction. We should not even leave one transaction also. Ascertainment of financial effect on business. So it is concerned with the combined effect of all the transaction made during the accounting period upon the financial position of a business as a whole, which means what is the effect of transaction? You made a sale transaction, you made a purchase transaction. What is the effect? You will either get profit or loss. It can be either one, not both. Next, we saw bookkeeping, we saw accounting. First, we need to see what is the difference between that. No, what is the difference? So bookkeeping is the process of recording of transaction. That's it. It will only record the transaction. But what is accounting? It is concerned with summarizing the recorded transaction. So accounting is even more than bookkeeping. So it will record, it will summarize, it will classify, it will interpret and communicate. So it constitutes the base of accounting. So it is a base of accounting, but here it is considered as the language of business. So accounting is a larger concept than bookkeeping. Financial statement do not form part. So in bookkeeping, we do not prepare any financial statement. But in accounting, yes, we prepare the financial statements. So managerial decisions cannot be taken with the help of this record. So once you record all the transaction, can a management take a decision based on that? No, management can take a decision based on the financial statements, which is once you prepare a profit and loss account, once you prepare a balance sheet, then only management can take decision. On the basis of sales, on the basis of purchase, they can't take. They can take decision on the basis of financial position or a financial result. Management takes decision on the basis of these records. There is no subfield for bookkeeping, which means bookkeeping is bookkeeping. We don't have subfields, but in accounting we have subfields. I told no, financial accounting, management accounting, cost accounting, social responsibility accounting. These are some of the subfields of accounting. Financial position of the business cannot be ascertained through bookkeeping records. Financial position means we can't construct a balance sheet based on just recording of transaction. After recording, we have to classify, we have to summarize, which means from journal to ledger, from ledger to trial balance, then only we can prepare our final accounts. Financial position of a business is ascertained on the basis of the accounting reports. See, they have given the relationship how the accounting will be. So bookkeeping is a subset of accounting and accounting is a subset of accountancy. So accountancy is a universal set, which means is a bigger picture. Accountancy, in that you have accounting. In accounting you have bookkeeping. So bookkeeping is a subset of accounting. So this is a minor part. So these subfields of accounting, see, in this particular thing we will do only financial accounting, which means normal. So we have cost accounting also. This is covered at the intermediate level. Management accounting, so these are covered at the intermediate level. Social responsibility accounting, human resource accounting, these are covered at a CA final level. Okay. Now, financial accounting, simple. What we learn in this curriculum, that is financial accounting. That's it. It covers the preparation and interpretation of financial statement. Again, financial statement. What is the financial statement? Profit and loss, balance sheet. Or the financial statement and communication to the users of accounts. It is historical in nature as it records transaction which has already been occurred. The final step of financial accounting is the preparation of profit and loss and balance sheet. That is the end step of financial accounting. After that, it is left to the management what they have to do. It primarily helps in determining the net result, which is profit or loss, for an accounting period and the financial position on the given date. Next, we have the management accounting. It is concerned with internal reporting, which means it is within the organization or within the company, to the managers of business unit to discharge the functions of stewardship, planning, control and decision making. The management needs variety of information. So only accounting information, it is not enough. They want the non-qualitative information also. Example, employee turnover, which means how much employee are at the beginning, how much joined, how much left, how much at the end of the period. So they have to check that also. The different ways of grouping information and preparing reports as desired by the managers for discharging their functions are referred as management accounting. A very simple component of the management accounting is cost accounting, which deals with the cost ascertainment and cost control. So in cost accounting, what do we do? See, this is a product. Okay, this is one product. Now for this I have to determine a price. So how do I determine? So I'll take what is the material here. So I have a camera, I have a display. So I'll calculate the cost. So material cost, then I'll add the labor, which means some employee have to work on this, then only it will become this, because everything will be separate. So it will be raw material. This is a finished product. To do that, I need employees, I need office or factory, I need materials or machine, everything I need. So I'll add all that cost. So that is taken care in cost accounting. Ascertainment of cost. How much should this be? How much this pen should be sold at? That is cost accounting. And cost control. Obviously, if it is more than competitor's price, I have to reduce it. But how do I do it? With the help of cost accounting. There are techniques. So you will be learning at an intermediate level, cost accounting. So there you have a separate subject. We will be discussing in detail how do you do that. Management accounting will be dealt with a higher level of chartered accountancy course. I told now. The terminology of cost accounting published by the Institute of Cost and Management Accountants of England defines cost accounting as so. In India also we have ICMA. In England also we have. So in England, what are they telling? The process of accounting for cost, which begins with the recording of income and expenditure or the basis on which they are calculated, and ends with the preparation of periodical statements and reports for ascertaining and controlling the cost. So here in cost accounting, we ascertain the cost, how much that should be sold. In accounting, we don't see that. In accounting, we record only sales. We don't record how do we ascertain the cost. Next, social responsibility accounting. The demand for social responsibility accounting stems from increasing social awareness about the undesirable byproduct of economic activities. So I don't know, pollution, it is a social cost. This will have an implication. How? If we cross if we don't follow the environment guidelines issued by the government, they will impose heavy penalty on you. So example I told now, if you dispose of your wastage chemicals to a nearby lake, the local municipal authority will impose hefty fines or heavy fines on you. So that is a social responsibility cost. As discussed earlier, social responsibility accounting is concerned with accounting for social cost incurred by the enterprise and social benefits created. So sometimes you'll get social benefits also. That also is accounted. Human resource accounting. Human resource accounting is an attempt to identify, quantify and report investment made by the human resources of an organization that are not presently accounted for under conventional accounting practice. These are the subfields. What are the subfields? Financial accounting, management accounting, cost accounting, social responsibility accounting and human resource accounting. But in this foundation level, we will emphasize only on the financial accounting. Okay. Next comes the users of accounting. So here they will be giving in detail who are the users of accounting. So generally we will be making them into two categories. One is internal, one is external. Internal means within the company, external means outside the company. See, internal users, external users. So management accounting is concerned with identifying information requirements as well as methods for providing such information to the management, means internal user. While the information requirements of outsiders are generally served by financial statements. I told no. External information or external users are only concerned with the financial statements. They don't want your trade secrets. They don't want your management accounting. Nothing. It is left to you. You do whatever you want. I don't want that. I want only the financial statements. So the first user is the investor. So I am an investor. I have my demat account. I want to purchase a share. I don't know which company shares I should purchase. So what I'll do? I'll go to the market, pick a company, do a fundamental analysis, which means I'll see the balance sheet, profit and loss. I apply my formulas, financial ratios, how they have valued their existing share, how much time is it of its profit. I see everything. How much is it of its net worth? Everything I will see. Investors, they provide risk capital to the business, which means the amount they invest in the business is very risky because they invest directly in the equity shares. What is the problem in equity shares? Problem is that you get paid at the end. When the company is dissolved, they'll pay all the loans, they'll pay all the creditors, external liabilities they'll clear first, then they come to equity. That is the risk. If you don't have amount after paying all those external liabilities, what you will get? Your amount is gone. So that's why trade market is risky. So, the stock market is very, very risky. Okay, they need information to assess whether to buy, hold, sell their investment. Also, they are interested to know the ability of the business to survive, prosper and pay dividend. So whether I'll check that the company has previously paid the dividend, then only I'll go. If it is not paying dividend, what is the use of investment? Only capital appreciation will be there. There will be no returns in the form of dividends. In a non-corporate sector where ownership and management are not essentially separated, the owners still need information about the performance of the business and financial position to decide whether to continue or shut down. This is the first type of user. Next, employees. Growth of employees is directly related to the growth of the organization, and therefore they are interested to know the stability, continuity and growth, because every employee wants their hike in their salary, or they want bonus at quarterly, monthly, something like that. So employees, what they'll do, they'll see the stability, whether the company is stable, they'll see the continuity or growth of the enterprise and its stability to provide remuneration, retirement or other benefits to enhance the employees' opportunity. Lenders, they are interested to know whether the loan principal or interest will be paid when they do. So I told you, banks also will check your balance sheet, right? If they give loan to you, you should be able to repay them back. If you're not able to repay, if you're a person like Nirav Modi or a Vijay Mallya, so if they were unable to pay the debts, actually, so they were unable to pay the debts, so now banks are behind them. Now as a lender, they will definitely check your balance sheet. Next we have supplier and creditor. They are also interested to know the ability of the enterprise to pay their dues, because I told you, usually the transaction will be on credit basis, which means you take the goods today, make the payment after 30 days, 45 days, depending upon the payment terms. That helps them to decide the credit policy for the relevant concern, rates to be charged and so on. Sometimes they also become interested in long-term continuation of the enterprise if their existence become dependent or survival. So there are certain industries whose sales is wholly dependent on one company, maybe a bigger enterprise. So X Limited is wholly dependent on A. So at that time also we see this. We also are the users of financial information. Next, customers. So I and you are also concerned with the stability and profitability of the enterprise, because their functioning is more or less dependent on the supply of goods. Suppose a company produces some chemicals used by pharmaceutical companies and supplies chemical to 3-month credit. If all of a sudden it faces some trouble or is unable to supply the chemical, the customers will be in trouble. I told you, sudden decision that the government of India will take a decision that X Limited should be shut down with immediate effect. What about the consumers? If they're already availing the services, they'll be under mess. Government and their agencies, they regulate the functioning of the business enterprises for public good, because you should not make any fraud. You should not take public money and run away. So that is also a condition. Allocate scarce resources among competing enterprises. Control prices. So now how they will allocate? See, now if you take the telecom sector, everyone will have to pay spectrum fees to the government of India. Now in India we have mostly two competitors, Jio and Airtel. There is a third one, which is VA, which is Vodafone Idea. So if you see Vodafone Idea's financial position, they were in a very bad situation. They were unable to pay the government fees also. So what government of India did, so since there should not be a duopoly, which means there are only two players, Jio and Airtel. So to avoid that situation, what government of India did, they asked ideally Vodafone Idea to that, if you are unable to pay the fees, issue us shares. We will be your equity shareholders. Don't pay us amount, we will be your equity shareholders. So to government, in order to avoid the in order to avoid these market leaders, which is the Jio and Airtel, they wanted Idea to be in the business. So that's why they purchased the share instead of their amount. So that's how they allocate the scarce resources. Control prices, charge excess duties and taxes. So they have continued interest in the business enterprise. Public at large is interested in the functioning of the enterprise, because it may make a substantial contribution to the local economy in many ways, including number of people employed, patronage to local suppliers, which means a big company is going to a small village. Obviously the standard of living of the local people will go up, because they receive the employment. People will go there for work. Local suppliers can supply them. They will also have more sales, something like that. Next, management. Management as a whole is also interested in the accounts of various managerial decisions. On the basis of the accounts, management determines the effects of various decisions on the functioning of an organization. So this helps them to make managerial decisions. So these are the people who will use the accounting information. Okay. So guys, today what did we discuss? So first we went to the meaning of accounting. So before that we did a background introduction. So why accounting, what is transaction, what is events. So on the basis of transaction and event, we came to the definition of accounting. What is the definition of accounting? Accounting is an art of recording, classifying and summarizing the information, and it should be in terms of money and transaction and events in a financial character, and interpreting the result there. So that is the definition of accounting. So then we saw the various definition given by various institutes, accounting institutes, but the ultimate definition was that it is maybe defined as the process of recording, classifying, summarizing, analyzing and interpreting the financial transaction. So it should be a financial transaction and communicating the results to the persons who are interested. Who are the persons interested? Internal, external, we discussed. Next, the procedural aspect. So how do we generate the information? So recording, classifying, we saw each term in detail. So who will be using the financial information, and the evolution of accounting as a social science. So this they can ask for a 5-mark question. Okay, please, this is important. And the objectives of accounting, functions of accounting. Then we came to the bookkeeping. So what is bookkeeping? So we will simply record all the transactions on chronological order. So it should be in a chronological order. Okay, we'll see that. Then objectives of bookkeeping. So here we discussed the objectives of bookkeeping as well. Distinction between bookkeeping and accounting. So bookkeeping is a subset of accounting and accounting is a subset of total accountancy. So bookkeeping is a smaller concept, but accounting is a larger concept. So we saw the distinction. So this is also important. Please go through this. Then the subfields accounting. What are the subfields? Financial accounting, management accounting, cost accounting, social responsibility accounting, and the human responsibility account, human resource accounting. So users, obviously you know who are the users, internal, external. So next, so today, since it is the first session, I will end here. So please revise. So today you take 15 minutes of your time. I'll ask you only 15 minutes of your time. Please revise once again all the things and come to tomorrow's class. So next, then see that tomorrow's session. Okay, so this how it will help you. So this will help you that when you start with the next session, you obviously relate all the things. Or when you're taking an online class, now what I used to do, even I was the student of an online class, what I used to do before starting the next class, I would revise the previous class so that I can make it out. So oh, this is happening. So this concept was explained in the previous class. So before sitting for the next session, please take out your 10 to 15 minutes and see what was done previously. Okay. So from tomorrow we'll go with the rest of the things, which is the relationship between accounting and other disciplines, role of a CA, other things. Okay. See if it is relationship between limitations, role of an accountant in society. What are the areas of service? In which areas do we serve? Once you qualify as a chartered accountant, what is that you do? Okay. So after that, we'll see the questions. So for today, we will close this session. I hope we have understood each and every concept that we have discussed. So we will discuss in detail going forward. So now we are at the basic level, which means we have stepped towards we have taken first step towards the success as a chartered accountant. Okay, so I hope you have understood everything. So we'll close the session for today. So thank you guys, thank you for your time. So once again, I'll tell you at the end again. So this is a ocean. So chartered accountancy is a ocean. So in order to cross this ocean, put 100% hard work. Luck will come along with it. Obviously you'll clear every examination at very first attempt. Please put hard work. So please revise and again revise. I'm telling this repeatedly because this course requires revision. That's why if you see any rankers, any qualified people, they'll tell you revise it. So they won't tell that read once again. I mean once. We have to read it again and again. Okay. So thank you today guys. Thank you for your time. We'll close this session.